Good day, trader. How are we doing today? Welcome to my channel once again. I want to especially appreciate all of you that show a lot of commitment and passion for viewing my channel, my line of thought as far as financial market is concerned. I want to thank you for the like, the share, and the comments, and special attention you have accorded my content. It has grown significantly over a short period of time. I want to appreciate you for that and encourage you to do more. I want you to particularly like and share the videos to other people, and that will also help the YouTube algorithm to help us show the content to as many that need solution to their problems. All right, so unfortunately, today's meeting is not going to be a participatory one because I have some events at the time this meeting is supposed to hold. So I'm just going to do a recording so that I'm not going to skip today's outlook. All right, so as usual, we want to check the fundamental events that we're expecting next week. There any fundamental events starting from Monday 20, this is Friday here, Saturday, Monday, there's nothing. Tuesday, we have German preliminary CPI, okay, that Europe, okay, all these we have to take note because at times CPI is usually very crazy, especially now that we have inflation everywhere. Of course, I believe you know what CPI is all about. CPI is what is used to measure inflation. Okay, that's just the changes on prices, of commodity over a period of time. Okay, all right, that's CPI. If CPI figure increases, it was 0.9, it came down to 0.2. That's a drop in inflation. You are expecting it to drop right now, probably because Euro have increased interest rates, and that increase in interest rates should drop, inflation. That's why the expectation is from 0.9 to 0.2. Okay, and if it comes down to 0.2, it means that inflation has dropped, and the implication of on the currencies. And on the same Tuesday, you're going to have central bank consumer confidence and job openings. We have this for Euro. You have to take note of this on Wednesday. ADP non-farm employment change. This might not give much volatility like the one on Friday. Yeah, September 1st, CPI, CHF, you have CPI. Take note of CPI. Used to be very volatile at times because we are in period where we have a lot of inflation everywhere. ISN, manufacturing PMI, you have to pay particular attention to Friday, September 2nd. Friday, September 2nd, average hours earning, non-farm pay, employment change. Take note of this, please. And unemployment rate for USD. All right, you have to take note of this. All right, maybe card will have its own release the next Friday to this. All right, that'll be on the 9th. Maybe that's when card will be released. All right, so now those are the fundamental news you are going to pay attention to while you are trading. Okay, sometimes this fundamental news release just help us to complete our structure. All right, helps to complete structure. All right, so that's why you must pay attention to them, and at times when you pay attention to them, it helps you to know where to get in, where to get out, where you are expecting a push, how the push should come. That is what this fundamental news release does for you. So without much ado, let's go to the chart. All right, of course, let's start from DXY so that we know how next week is going to be. You can see in weekly time frame. All right, weekly time frame, you have a very bullish candlestick pattern right here, clearly engulf this. You have this continuation of the bullish pattern. But what I'm expecting is just a little pullback, you know, and then we make a continuation move to the upside. That was in weekly. Then in daily, you can see right here, there's break of structure to the upside, break of structure. Uh, all we want to do is to see how this structure that is broken can be retraced to, can give us a discount and retrace to appropriate level of structure. Okay, I can retrace to appropriate level of structure, and you see something like this. So I already gave what is wrong with this. Let's make this. Okay, so you already see that daily already give a pullback, but to me, this is not satisfactory enough. I would like to instead, I would like to see this come back to around 107. I want to see it come back to around 107. Around 107 would be the best, to start the week. Around 107 here, okay, would be the best to start the week, guys. Okay, if DSY can come this way, come this way, this way, that would be the best for us. Okay, then from here you can pick it up to the upside. That is DXY. Of course, if you are expecting a retracement up to like up to 107 in DXY, then you should know what will happen to other majors. Okay, see this on a weekly, we already saw the flow. All right, last week we already saw the flow on this pair, that the pair cannot appear with this kind of candlestick pattern on a weekly time frame, that it will not drop to the downside. Okay, and on daily, fortunately, we miss our entry on this particular pair, because what I do is simple. I look at the weekly time frame. So I normally take the average. I look for psychological level on the average of this engulfing candlestick pattern. And where I was able to spot at the middle is 0.700. All right, I spotted this level. And when you come to daily time frame, you can see that market came exactly to the psychological level. Okay, psychological level came exactly to the psychological level here. And then when I come to my entry time frame, give me a proper setup, guys, but I missed the trade, because when you have this wedge formation, I told you, when you have this wedge formation very close to your supply, okay, what is just telling you is that this market will break out to tap liquidity as supply, and then drop. And you can see that when it was tapping, this liquidity was in London session. What happened in New York? That is 2:30. As soon as capital market open, this pair drop. Fortunately, I missed it. So what are we to expect next week? Just expect a correction, because liquidity is grabbed already. We expect a corrective structure up to 0.6950, exactly this level, and this market will drop. Okay, all right, expect it at this psychological level. We have to wait till New York session to see if it can correct to this level, it drop again. That is AUD USD weekly. For Euro USD, and you see that right here we have the move. This is a bearish market. Of course, even the blind can see that this is a bearish market. Boom. Okay, and the weekly time frame, then daily time frame. Of course, see how right here, see how liquidity is at work. Okay, you see equal high here. What do you see? Right here, you have this consolidation, break to the top, take liquidity, and flush down. So what are you expecting now? Right now, guys, you're expecting a pullback. You expect a pullback when we open, pullback to this level. Just as we are expecting a pullback to the downside for DXY, you also expect a pullback to the upside for euro dollar. Especially if you can see pullback to around parity. Okay, parity is 1.0. Can pull up to about 1.0. That will be okay, right? This level, that will be okay. Come to 4 hours time frame. Uh, let's see. Okay, it's already grab, right? It's already grab at that level. So what I'll be expecting is if I can see a correction, okay, London session upside, grab it again. I'll be happy to see this come down. Okay, because I don't expect the market will open on Monday and this pair will gather enough liquidity to begin to go down. I believe it has to go back to the top, grab it properly, and then move down. Especially, it will be very good if you can still break this top and come over to this area. That will be the best. Okay, from here we take it to the downside. That's around 1.0120 better. 1.0200. That will be the best for us to take it to the downside. Okay, GJ weekly GJ had been very consolidating and very annoying, right? Very consolidating and very annoying over time. So for me, I'm going to excuse myself from GJ for now because it's not giving a clean structure, for entry. So I'm going to excuse myself from GJ. All right, you can see this level of consolidation is just too much. Structurally, I had expected this move to the upside, 1, 2, and 3, move to the upside to hit this other block. Then from here, you have the best opportunity to sell to the downside while respecting this trend line, guys. While respecting this trend line, this was my expectation. But honestly, it was not to be. Other majors are falling, so I'm not sure that GPP, JPY will have time, to move to the upside. So that is daily time frame. If you look at it on weekly time frame, let's delete some weekly time frame. All right. Try to look at this structure. I've taken a look at it severally. I'm trying to understand what is going on. Trying to see this as a triangle in the making because of my expectation that GJs will follow other majors. Trying to see this as a triangle with this as a correction to the upside. Okay, and then you have this impulse. You have this impulse, and you have this triangle A, B, C, D, and E to break down to the downside. Okay, that is break down to the downside. You have corrective structure and a further sell-off. Okay, sorry, and a further sell-off. Guys, this is my expectation for GBP, JPY. I'm no longer thinking of upside again. So what will I like to see when we resume? Want to see that selling pressure, to appear. But right now we have a clear rejection from the upside. We have a clear rejection from clear rejection to the upside. So now we have a push. Already we have a push to the downside. This illustrates how powerful the push to the upside is. So right now, what I will expect is that when market open, I want to see the next psychological level to this area. This is 161.30. I want to see 162. Yes, you can make it to 162. That would be better. That would be a better price to sell. You can make it back to this place. Okay, go to 30 minutes. All right, this is how I look at the market. Okay, you can have a consolidation right here in Asia session. You can have the consolidation right here. When London come, if you can have this grab to the upside, okay, and then New York come to push it down. This is what I would like to see in GJ, in line with our recent thoughts that it should go with other majors to the downside. And of course, this pair actually give us an entry, but only that we did not pay attention, because I told you, whenever you notice a wedge formation just before the supply zone, you know that this London session will break this wedge to the upside, and exactly at 2 o'clock or 2:30 in my time zone, or 9:30 Eastern, you can take this pair to the downside. That's how it works, guys. That's how it works. Consolidation, wedge formation, reaction in London, and then the true trend come in New York, push down. That's it, guys. So just watch out for 162 for a sell. If the pair can push up to 162 at London, if market open and then this consolidation is breaking down to the downside, guys, do not sell it, because it's going to go back up. If it doesn't go back up, it's not going to sell well. All right. So that's GJ, guys. GU. GU has sold so much. As far as I'm concerned, it has to come up a little, okay, around 1.200. That's to come up to around 1.200. There's nothing to complicate this market. We don't have to complicate our analysis. Let it come up to this level on weekly, on daily. Okay, okay, on daily. What we would love to see is if this consolidation here, if it can come right back up for next week trading. From here, we push it down. Okay, but if it's going like this way, I would not like to get involved, guys. I won't like to get involved. That's to come up again. All right, because if you look at it on a weekly time frame, it has sold so much, and even on a daily, weekly, it has sold so much. So before we get involved, we like it, to make a little upside. All right. So even if it doesn't make it to this level, let it correct here. Okay. Let it correct, and see the reaction in London. See the reaction in Asia session. See how it behaves in London, and see where it's gravitating to in New York. If it's gravitating towards the upside as we approach New York session, especially the New York stock market open, where there is usually a lot of liquidity, as you experience it in forex market. Once it's gravitating towards that level, look for your sell opportunity to the downside. But I would love you to come to this psychological level. All right. This pair two has been consolidating. I don't want to get involved in it. It's been consolidating. It's not giving a clear setup, but if you look at it very well from daily perspective, you can see that we are right now maintaining this trend. Okay. or what I expected on Friday. Didn't do it. You have this equal top, you know. I wanted it to grab liquidity right here, you know, this other block right here. This was my expectation. Okay, this is how I look at the market. You can see it's creating a trend line liquidity here. So I wanted this to happen, guys. If this will happen, I would have been very happy, but it didn't happen. I wanted it to gravitate towards 139. That's where it's taking liquidity at this other block. You see, when this market was falling from here, you can see it broke structure. This is a true impulse, guys. It's a true impulse. So I would have loved this equal high buy side liquidity to be taken, or trend line liquidity rather. Let it be taken, grab it here, then we now have a strong push to the downside. But at the level where this market is, I don't think it's going to be able to sell well, except if anything happens that help this pair to move to the upside. Of course, you know, there's going to be German and French manufacturing PMI on Tuesday. And I believe that Tuesday should push this market to the upside to around 139, and from there look for sell opportunity to the downside. Okay, so that is Euro JPY. USD JPY, of course, you know that USD JPY will always follow what dollar index is doing. And right now, dollar index is bullish. So you can see a reason why USD JPY is also bullish. So I would love USD JPY to come to around, to correct to around 136, possible area, possible level 136. Okay. I want it to come to 136. I cannot participate at the level where it is. I would like it to come down. And if it doesn't come down, I'm not going to be part of it, guys. Let it be going. But if it can come down to around 135, rather, 135, this will be great. From here, we look for buy opportunity to the upside. But if it doesn't come to 135 and it keeps going this way, that is bye-bye as far as I'm concerned. Okay, don't want to get involved in a market that is too expensive. All right, you buy a market that is too expensive, you pay for it. All right, so USD card, of course, you see USD card. Initially, I was having that when you look at daily time frame, you'll be looking for a sell bias. But if you look at weekly time frame, you see that the sell is not going to come now, because you have this move that broke this structure, you have this correction. What do you expect next? You expect a push to the upside as far as weekly is concerned. And you can see this bias for push to the upside is explained more by this formation of a clean engulfing candlestick pattern right here. Okay, so what I love to do is to check the middle. The move has already happened. 29, that's my level. That's the middle. That's what I do. Okay, that's how I see this market every day. 29. All right, daily. Can you see that's already gravitated towards that 29? But what I was saying that time is the other time is that if you are not careful, if you don't look at weekly time frame, if you are just looking at daily time frame, guys, you are going to see this engulfing daily engulfing candlestick pattern, and by that you are going to think that you are going to have this move to the downside. That is the importance of checking the pattern you are seeing on weekly time frame. But because higher time frame pattern you know, is more powerful than lower time frame pattern, that's, you know, explain why this market is, you know, is bullish right now, because weekly time frame gives us a bullish pattern. And you can see even the level where you have engulfing right here, that level is being shattered already. It's going with a bullish candle, it's being shattered. That's to tell you that, you know, where you have a conflicting bias from higher time frame and much lower time frame, you see that the bias on the higher time frame is what will happen in the market. Right now, what I would like to do is to look at this engulfing candlestick pattern and check psychological level at the middle. Okay, around the 29.50. Okay, that's a sub-psychological level. I would like to see this pair come to this area. Okay, come to this level, go back to 30 minutes. Okay, see it, see it that this gave us an entry, but probably we didn't pay attention, guys. Let me show you the entry on the New York session. See it, see this wedge formation. Told you wedge formation. When it break down to the psychological level and pick order here, 1.2900 at what time? At New York session. That is 14:30. That's 9:30 Eastern. All right. My time zone is 14:30. Can you see? Boom, to the upside. What are you expecting, guys? Because of the bias on the weekly, we're expecting this to be bullish, and then just expect corrective structure back to this level, 29.50, where we pick it up to the upside. Is that okay, guys? All right. That is a USD card. USD card. I want us to look at GBP card, guys. Seems to have opportunity there, right? Let's look at the weekly time frame and see that we need some pull up for USD card, GBP card, but we have to be careful on what we do here because majors are falling. So let's watch what we do here, because right here you have this candlestick pattern right here that suggests to us that we're going to have a push down to the downside. That's first thing. Then we go to daily time frame. What do you see in daily time frame? Seems as if we just need a pullback for a continuation to the downside, because I've shown you this pattern for quite some times now, that everything you have here, guys, is going to be a corrective structure for downside. Let me show you once again. This one here, this one here, all this is going to be corrective structure for us to get the move here. This move here, drop down, correction, we're going to have this drop down. So we should achieve equal length between this structure and this one. And for that to be fulfilled, guys, we're going to come in between this level. Okay, that's the eventual target point for GBP card, guys. And then, but does it just go in a straight line? No. Let's now check the analysis and see where we are going and how we should find our way to that level. Right now on the weekly time frame, okay, this look like an ending structure, but because we're in a higher time frame, I'm still going to ignore the ending structure. Where's the ending structure, guys? This, okay, and because GBPs and euros, they are falling crazily, and card has a better fundamental. That's a better fundamental right now because of the a better current account balance, because of a lot of money they made from crude oil. It's a crude oil exporting country. But right here, guys, you have engulfing candlestick pattern and a very clean rejection at this level. So upside is ruled out. So we have to continue to look for a downside because of what we have seen on a weekly time frame. Okay, so on a daily time frame, guys, you have this boom to the downside, but of course at this level we need some correction, because if you look at it very well, look at the way it pulls down here, pulls down here. Does it push down this way? It shows some decelerations, guys. This is a clear deceleration. It's decelerating, and decelerating means that it doesn't have enough volume to push more to the downside. So at that point, since we still have overall bias to the downside, we should expect some measure of correction. That's what it means. We should expect some correction, guys. So in understanding how that correction should come, we have to go to lower time frame and figure out what's going on here. Okay, Go to 30 minutes time frame. See what's happening right here. So let's go to 4 hours. Okay. All right. So you see, we're in a 4 hours time frame. The best that I would love to see from this market is if you can give a pullback to this level, take order at this zone, guys. We have a supply here. Yeah, is what I want to see. Do you have any psychological level here? Yes. At sub-psychological level 1.5450, guys. So I want to see GBP card gravitate towards this level, guys. Yes. So you can see that already you have an ending structure here. Does it come with a divergence? Does it come with a divergence? Let's see. Yes, came with a divergence, guys. Can you see higher high here, lower low, lower low here, higher high, higher high here? So that means that this move to the upside is going to come. We're expecting this move to the upside. Let it come this way, come this way. You are not to buy it. Let it take liquidity from here, and 5450 from here, downside again. Can you see? This is how we look at the market, guys. This is how we look at the market. Okay, downside. If you are looking at it this way, guys, you just need to correct some little things for you to be consistently profitable. Add your risk management and all those things. But this is how we look at the market. Good, guys. On weekly time frame, let's check what's happening to gold on weekly time frame. For quite some times now, even when this bullish rally was going on, I did tell you that I was not going to be part of those that will buy gold. All right. And a friend told me, Nat, why will you not buy gold at this level? I told that friend, if you understand the concept of liquidity, you will not buy gold at this level. He said, why? I said, it's simple. Can you see that right here, you have equal low? And when the market came from the downside, he failed to take that low, all right? And by failing to take that low, it did not take any liquidity along with itself. All this, therefore, is a result of profit taking from those that were selling, okay, not picking order of those that bought, okay. If it has picked order from those that bought, this will have made a boom to the upside, but it didn't take that order. So the pullback, the daily pullback you see or weekly pullback you see here is a result of profit taking. And when those that are selling are taking profit, you now have lesser supply and have more demand. So you have excess demand over supply, even though nobody was buying. Do you understand now? That's why you had this happen. And then you should have this move to the downside to eventually break this low, probably come to this demand zone, pick order, and then move massively to the upside. Okay, do you see this? All right. So, having said this, guys, can you see as the market was going bullish, you see this pattern appear. This is a bearish engulfing candlestick pattern. And of course, you know how I do it. I just look at it. I go back to the middle. I pick a level. A level 1775 will be okay. 1775 will be okay. All right. Pick that level. Okay. Here, if you like, you can work with fib. This does the same work with fib, guys. All right. Does the same work with fib when you pick a level. Fib is also work. All these are just result of psychology, human psychology. All right. So if you like, you can use fib. If you like, you can use this system I'm using for you. All right. So daily time frame, you see it. So just remain a very little pips to the upside to get there, and it came down. So now what I want us to check is this: when market open, I would like to see this pair come back to this level, if possible, or break this top here, come back to this level. Okay, if you can come back to this level, we look for entry at 15 minutes time frame or 30 minutes time frame or 5 minutes time frame. Where are we going to break this low, guys? We want to break this low. Until we break this low before we take our profit. That's it for good, guys. And somebody will ask me, what are you going to check here? Okay, let me show you. Okay, I see. Let me show you. Let me show you, guys. Let me show you. I still expect gold to come this way. It will come this way. It's going to trend, can trend, can trend, can trend, can trend. Can even form wedge here, break the wedge in London, flash down in New York, and then go. This is what we are expecting, okay? If it keep going down from here, guys, I cannot be part of it. That is the mentality you have to develop in this market. If it keeps going from this level, do not be part of it. Even though we had overall bias as bearish, don't be part of it because the price is too low here. For you to buy, you have to buy at a premium price, guys. Let it pull up before you buy. Then US 30, guys, it was a massive sell-off. I profited from it, okay? But it was a clean analysis, guys. Look at it. The move is down. The flow of the market is bearish, okay? And then you have this break. Always consider liquidity. All about liquidity. Market broke this trend line liquidity, that's SSI liquidity. And where does it grab it? You see this whole area from here. Let me show you, guys. Let me show you. Can you see from this candle to this place? Can you see this is supply? Yeah, I can see exactly as market peak that liquidity and that supply, a massive flow to the downside. Last week we made some money here. You know, I gave you the chart, and this week I did not give chart of this massive sell-off, but I think I made some decent profit from it. So what are we expecting? Next week, what I will be expecting is simple. I would like this daily candle to at least pull back to around 32.50 if possible, or 33 if possible around this level. You just want some level of pullback because you have a daily engulfing, okay, right? Just some pullback right here. You have some pullback to this level and you sell again. That's all. Some pullback to that level and you sell again. It's as simple as that. Do not expect that this pair or this instrument is going to go to cross this level to the upside. No, 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 no. It's not going to work that way. It has grabbed the liquidity here and came. It has given us a sell pressure by the appearance of a bearish engulfing here. So all a daily bearish engulfing you saw here. So all you are expecting now is just a corrective structure. But make sure when the corrective structure form, do not get involved until it is the New York session open. Do not get involved. That's when you are going to have a massive move to the downside. Okay, there's still some other secrets that is connected with the market entry. Relationship between forex market and capital market, especially New York Stock Exchange. If you don't know these guys, you're going to struggle in this market. There's a relationship between New York Stock Exchange and the liquidity in the forex market. All right, all the liquidity you have in the forex market, come with low volume. And of course, when you have low volume in the market, you tend to have high volatility. And I've been able to discover, guys, why 90 to 95% of traders fail. One of the reasons is that retail traders are not able to differentiate times when there is high volatility and times when there is low volatility. I am telling you that when there is, low volume in the market tends to be very volatile. up, down, up, down, up, down, up, down, up, down. And such flash up, flash down market is very difficult to trade. But when there is high injection, when there is volume in the market, when the market is very liquid, okay, market assume a specific direction and maintain that direction. That is the time you are going to either have excess demand over supply, and in that case, market will buy massively, or you have excess supply over demand, and then market will sell in that direction because the volume is much. The market cannot afford to go up and come down. But when volume is low, there tends to be agreement, there tends to be equilibrium of price in the market. There is agreement of price between buyers and sellers. The market is in equilibrium, so it will be going up, favor buyer, favor seller, favor buyer, favor seller. But as soon as there is high volume injection into the market, market will now assume a certain trend, whether bearish or bullish, and it does not go up and down again. Let me just show you an example of what I'm telling you. Let me show you an example of what I'm telling you. Can you see this level? You see this? There is equilibrium. Market is at the state of equilibrium right here. Okay? At the state of equilibrium. Why was it at the state of equilibrium? There was agreement as to price range that these instruments should go. And then there was low volume injection. And this low volume injection resulted to what is called volatility. That is the volatility you are seeing here. This market moving down is not volatility. No, 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 no. It's calm. It's directional. It's not volatile. It was volatile when it was within this box. And the volatility is as a result of low volume injection in the market. And in such scenario, you are advised not to trade such market. But what does retail trader do? They trade the market in volatile situation. All right. But experienced trader, what do they do, guys? They allow this market to break out of this fair value zone, take liquidity from supply, and they now get involved when market is not volatile. So to retail trader, forex market is the most volatile market you can think of. But to experienced trader, they get involved when the market is calm. Okay, they get involved when the market is calm. Look at this market here. Okay, can you see? Very volatile, very volatile. Can you see why? There was low volume injection. But look at it. As soon as volume came, what do you see? Boom. So if you are analyzing your pair, you must be able to clearly identify area where you have low volume injection that resulted in high volatility, and try as much as possible not to get involved. So you now have to reposition your chart, reposition yourself to get involved. Look at where the market will break out to. If it break out like this to the upside, when you are at a supply level, just get an entry above the consolidation and the market will push down. Should I show you another example? Yes, I can show you countless example. Can you see this box? Can you see this triangle, guys? This is low volume injection and high volatility. Can you see the candle? Let me show you. Can you see the candle coming down, going up, coming down, going up? Can you see? This is low volume in the market that resulted into this high volatility. So don't think when market is highly volatile, there is high volume injection. No, 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 no. Don't think like an amateur, guys. When there is low volume injection, market tends to be very volatile. This is what you see in the box here. And don't get involved. But guess what, guys? Look at it. As soon as you have a breakout to catch liquidity and supply, what happens? Do you see volatility again? No. No more volatility. Can you see? Market is straightforward, just assuming a single direction. Okay, so high volatility is a result of low volume. Low volatility, which you see from this gentle cell, is a result of high volume injection. And if you go and check it, it's New York session 1430. There is combination of London volume plus New York volume, and that is the biggest volume you have in the forex market. Okay, there are still a lot of secrets that is connected with these guys. my mentor and my mentee, they are going to definitely enjoy it all. I will show it to them. So it's not everything that I do for free here, but I've showed you some things that I know will help you. BTC, guys, BTC. Okay, BTC still going to go down. For those that are anticipating that BTC will go up, they should have a rethink. As soon as I got this, I was taking this to be a diagonal, a leading diagonal. And if it's a leading diagonal, then we should have seen that this will have made at least 50% retracement for it to push down. Okay, and then you have this other block right here. You have to be careful at this other block. Okay, this level. If BTC come next week straight on to this level, you have to watch out for a possible buy opportunity. And in that case, it means that this structure here is a leading diagonal that breaks down in 3 waves and for a continuation to the upside. All right. Okay. But right now, majors are breaking down, gold is breaking down. We have to be careful with the way we look for sell opportunity. But on daily time frame, guys, if you come to this level and it's giving us a daily engulfing, guys, daily engulfing candlestick pattern right here, guys. Okay, that is a confirmation of upside. We just go back to 30 minutes time frame. Okay, go back to 30 minutes time frame. You know, we have already gotten our impulse, get our correction, we move to the upside. It's as simple as that. Last but not the least, guy, I would like to show you AUD JPY. I'll show you my thoughts on AUD JPY. I had exactly this setup for you guys. Let me go to the Telegram channel. I have to show you exactly how we do it in our group. All right, just hold on, guys. You have to hold on. Can pay a lot of price for knowledge. Let this come up. Let this come up, guys. Go to my Telegram channel. You see what I want to teach you. When you know this, you know it for life, guys. Analyst. Once you know that pattern, you know it for life. All right. Can you see? Can you see, guys? See this? I've showed, I've displayed this severally in my Telegram, in our trading community this week. I said this wedge will break out to the upside. Even when it was coming, a member of the community said, this is wrong because we are not having a buy that is late, that this sell is late. I said, wait and see. This wedge must break out to the upside, must catch liquidity at supply. Why is this a valid supply, guys? Because this move to the downside broke a structure here. So that means this is a valid supply. And this is 3-wave pullback to the upside to 78% of this move. This is a very critical conference, guys. So I have said that this chart is going to break to the upside. Excuse me, going to break to the upside to catch liquidity at the psychological level of 106, and it will move to the downside. Can you see now, guys? Okay, let's go back to the chart and we'll now see what is happening in the chart. Can you see? Can you see, guys? Breaking of the structure, tapping liquidity at the right zone, and then you have a move to the downside. The pair is not going to visit this level again. Forget it. It's not coming back to this level. The liquidity has been taken, guys. So all you just have to do right now is to take a fib. Take a fib, guys, and target the right fib level. At 50%, 50% is great, okay, or 61.8. All right, anyone, just wait. New York session, boom, to the downside. That's for AUD USD, right? And you see that all conferences, you know, have been respected, okay? And so that is it from me, guys. I want you to like and share, you know, like and share and comment. Whatever you want me to do, whatever you don't understand, just let me know, guys. I'm going to help you. I'm here to help you. Just make a comment at the comment section. You don't understand this. I don't understand this. I don't understand that. I will come to your rescue, guys. Okay, see you next time, guys. Bye-bye.